Title 8 of the Social Order. Chapter 1, General Provisions. Article 193. The social order is based on the primacy of work and aims at social well-being and justice. Sole paragraph. The state shall exercise the function of planning social policies, ensuring, in accordance with the law, the participation of society in the processes of formulation, monitoring, control and evaluation of these policies. Chapter 2 of the Social Security, Section 1, General Provisions. Article 194. Social Security comprises an integrated set of actions initiated by the public authorities and society aimed at ensuring rights relating to health, social security and social assistance. Sole paragraph. The public authorities shall, in accordance with the law, organize Social Security based on the following objectives. Subparagraph 1. Universality of coverage and service. 2. Uniformity of benefits and services to urban and rural populations. 3. Selectivity and distributivity in the provision of benefits and services. 4. Irreducibility of the value of benefits. 5. Equity in the form of participation in funding. 6. Diversity of the financing base, identifying in specific accounting headings for each area the revenues and expenses linked to health, social security and welfare actions, preserving the contributory nature of Social Security. Seven. Democratic and decentralized nature of the administration through quadripartite management with the participation of workers, employers, retirees and the government in collegiate bodies. Article 195. Social Security shall be financed by the entire society, directly and indirectly, in accordance with the law, through resources from the budgets of the Union, states, federal district and municipalities, and from the following social contributions. Item 1. From the employer, the company and the entity equivalent to it, in accordance with the law. Incident on line A. The payroll and other income from work paid or credited in any capacity, to the individual who provides services to it, even without an employment relationship. B. Revenue or turnover. C. Profit. Subparagraph 2. For workers and other Social Security beneficiaries, progressive rates may be adopted according to the value of the contribution salary, with no contribution being levied on retirement and pensions granted by the general Social Security system. Three. On revenue from forecasting competitions. 4. For importers of goods or services from abroad or those deemed equivalent by law. 5. On goods and services under the terms of supplementary law. Paragraph 1. The revenues of states, the federal government and municipalities earmarked for Social Security shall be included in their respective budgets and shall not be included in the federal budget. Second, the Social Security budget proposal shall be prepared in an integrated manner by the agencies responsible for health, Social Security and social assistance, taking into account the goals and priorities established in the Budget Guidelines Law, ensuring that each area is able to manage its resources. Third, a legal entity in debt with the Social Security system, as established by law, shall not be able to contract with the government, nor shall it receive tax or credit benefits or incentives. Fourth, the law may establish other sources intended to guarantee the maintenance or expansion of Social Security, in compliance with or as provided for in Article 154, Paragraph 1. Fifth, no Social Security benefit or service may be created, increased or extended without the corresponding source of full funding. Paragraph 6. The social contributions referred to in this article may only be required after 90 days have elapsed from the date of publication of the law that instituted or modified them, and the provisions of Article 150, Paragraph 3, Line B shall not apply to them. Seventh, charitable social assistance entities that meet the requirements established by law are exempt from Social Security contributions. Eighth, the producer, the partner, the sharecropper and the tenant farmer and the artisanal fisherman, as well as their respective spouses who carry out their activities under a family economy regime, without permanent employees, shall contribute to Social Security, through the application of a rate on the result of the commercialization of the production and shall be judge of the benefits in accordance with the law. Ninth, the social contributions provided for in Item 1 of the caption of this article may have differentiated rates due to the economic activity, the intensive use of labor, the size of the company or the structural condition of the labor market, and the adoption of differentiated calculation bases is also authorized only in the case of Items B and C of Item 1 of the caption. Paragraph 10. The law shall define the criteria for the transfer of resources to the unified health system and social assistance actions from the Union to the states, the federal district and the municipalities and from the states to the municipalities. Observe the respective counterpart of resources. 11. Moratoriums and installments of more than 60 months are prohibited, and in accordance with supplementary law, the remission and amnesty of social contributions referred to in paragraph of Item 1 and Item 2 of the caput are prohibited. The law shall define the sectors of economic activity for which contributions levied in accordance with Items 1, Line B and 4 of the caput shall be non-cumulative. 13. Repealed. Paragraph 14. The insured person shall only have recognized as contribution time to the general Social Security system the period in which the contribution is equal to or greater than the minimum monthly contribution required for his/her category. The grouping of contributions is insured. 15. The contribution provided for in item 5 of the caput may have its rate set by ordinary law. The contribution provided for in item 5 of the caput shall apply to the provisions of Article 156A, first paragraph, items 1 to 6, 8, 10 to 13. Third paragraph, paragraph 5, items 2 to 6 and 9 and items 6 to 11 and 13. Paragraph 17. The contribution provided for in item 5 of the caput shall not be included in its own calculation basis, nor in that of the taxes provided for in Articles 153, Item 8, 156A and 195, Item 1, Line B and Item 4 and the contribution to the Social Integration Program referred to in Article 239. Paragraph 18. A law shall establish the cases for the refund of the contribution provided for in Item 5 of the caput to individuals, including in relation to limits and beneficiaries, with the objective of reducing income inequalities. The refund referred to in paragraph 18 will not be computed in the union's net current revenue for the purposes of the provisions of Articles 100, paragraph 15, 166, paragraphs 9, 12 and 17 and 198 paragraph 2.